Is the stock market going to crash? Are we going in a recession? Is the housing market, is it going to implode? Or is the S&P 500 7 that keeps going up, up, and up? Is that sustainable? What is going on? It's a crazy world, and we're going to look into it next. Yes, nothing's making sense. Treasuries are going up. That's crazy enough to think that interest rates going up, but how is interest rate going up and gold is going up too? That doesn't make any sense. We're all going to try to put some sense into this market today on Real Estate Daily. Welcome everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, before we jump into it, this crazy video, let's go hit that like button. Let's get as many likes as possible, and let's get it going, man. This is absolutely nuts. Go to Kobesi Letter, and let's go see what they have to say. Now, this is a post, and I've been thinking about a couple of these things, but they put it all up in a nice little bundle. It says current situation, stocks falling like a recession's coming. So as we go over the S&P 500, well, we have 7 stocks that are doing all the business. And we have the other 493 that are just squandering. They're at zero right now. They're almost at ground zero. But the other 7 have skyrocketed. Now, we did see NVIDIA just start to take a dump everywhere. So more and more people are getting nervous about the stock market, and it is kind of, you feel the break. It says home prices rising like there's no recession. Okay, bonds falling like the Fed is raising rates, gold rising like the Fed is cutting rates, oil prices rising like a major war is coming, and tech stocks rising like there's no problem at all. Risk assets, let's bring them on. It doesn't add up. It doesn't make any sense. How do we make sense out of this? Well, it's all called market manipulation, but we're in a new era of market manipulation, and that's where the Fed's at. So what the Fed's idea is that we're trying to stay as level and steady every single year, year over year, where we don't see too much of this and not enough of that. But what have they really done? What has the Fed really done? Well, first of all, they're not even a government entity, but they are connected to the government in a whole different way. They're not elected officials, as we know. They're appointed, at least, they're appointed. And this happened way back, 100 years ago when all the richest families got together on an island, and they decided to make the Fed. And for me, at minute 1, if you ever read it, I can't remember the island off the top of my name. It's a book, but these people got together and they wanted to manipulate the money, and this is how you do it. If the Fed wasn't involved, would we be in this bad situation? Absolutely not. We wouldn't see them printing money. Fed wouldn't be printing money. We wouldn't see them raising or lowering interest rates to zero. It would be market interest rates. It would be what the market wanted and not what the Fed wanted. In 2021 was the worst year we've ever had. The government, approved $8 trillion in spending, which was completely, not one of us came up and said, this is better. Our life got better. All it did was bring inflation in. And so now we've had a couple of moments where we felt inflation. We can call it inflation. It was a definition, but the government said, no, we're going to change the definition of inflation. We're going, or recession, we're going to go into this. So with all that being said, the easiest flight to a risk-off asset is precious metals and gold. So that's where a lot of people have ran to. Gold and bonds. Bonds are backed by the U.S. government. You go there, you look at a 1-year bond, I think it's 5.6, 5.7%. And for 1 year, you get 5.7%. On your federal taxes, you can write, you don't have to show that made extra money. You don't have to pay taxes on it. It's not financial advice. Ask your tax consultant. But that's where they are. They want bonds. Well, the countries across the world aren't buying our bonds. Or actually, they bought our bonds, and now they're just not repurchasing them. They're putting in other assets. They don't want to deal with the dollar. So to make the bond market more attractive to more people, they raise the bond prices, which typically have some kind of coordination with the Fed, right? And so but the bond market's gone way past whatever the Fed has done. I mean, literally 5% on a 10-year, which that's what the housing market looks at, it just keeps going up and up. I mean, it just keeps going up, and they have to. The Treasury put out 30 and 20-year bonds last week. Nobody was buying. No buyers. They're panicking. So what they do is they'll go throw out the 10-year bonds, and they'll say, oh yeah, buy 10-year bonds. Well, let's make it more attractive than it was the week before that. That's what I feel is happening. They have to sell these things because they are spending money out of control. I mean, $5 billion in the hole every single day. The deficit's going up faster than we ever expected. The only way they can actually feed all the bureaucracy bullshit in Washington, D.C. is to sell bonds. And the only way they want to get people to buy bonds is they keep raising rates on it so it makes it more attractive, and that's what we're doing. We're seeing right now. And that obviously kills the housing market because the bonds are connected to the housing market. The 10-year bond is. So that's my little nutshell. Let's go. CNBC kind of says it as well. The 10-year Treasury yield just crossed 5% for the first time since 2017, 15 years ago. Here's what that means for you. Now, a lot of you are saying, well, Troy, we're back to 2007. I'm saying absolutely not. Absolutely not. And why, Troy, is it not back there? Troy, I don't remember that in 2007 we had 8% interest rates or higher. Troy, tell me what the F is going on. This is what's going on. When you look at the bond, the 10-year bond, typically what's baked into it is 150 basis points. And that's what lenders lend on homes, cars, whatever, autos. That's what they lend on, 150 basis points. But we've lived off the Fed buying mortgage-backed securities for so long that we forgot that they are manipulating the market by buying these mortgage-backed securities. So since the Fed is broke as hell and they have to print money just to keep the government up and sustainable, what have they stopped doing? They stopped buying mortgage-backed securities. So all the lenders freaked the F out. All they did was freak the F out. And when they did, they added additional 150 basis points. So if we look at 5% is on the bond, it crossed the 5%. You have 150 basis points on top of it, right? Which is the norm for all these years. But because the Fed was always buying mortgage-backed securities and have stopped, then the risk of these going bad has now gone up because you don't have the backing of the United States government or the Fed. Then so they put another 150 on it. So that's where you add up to 8%, and that's where you're seeing it. Nobody in their right effing mind who has a 2 or 3% interest rate is going to go triple their interest rate to do anything. Unless you're desperate for money, pulling money out of your house, completely desperate, that's the only way you're going to go cash out refi, and you're going to go cash out refi just a little bit here and there. Don't be stupid. Don't go a hard money lender. My God, I can imagine what they're charging. It's almost loan shark dollars now at this point. Well, we already know loan shark dollars are from the credit card. Credit card companies are anywhere from 22 to 30% right now. I have preached this now for 2 years. Pay your credit cards off. Do not spend. Discretionary spending, get rid of it. Stay home. Cut down on your bills, whatever. You've got to go hunker down until we get past this and figure this all out. All right, let's jump in the Kobesi letter again. All right, again, give them a follow on X. Very, very important. They give you the real news, right to the point, no opinion. Guys, do me a favor also, hit the subscribe button. I really would appreciate it. It really will help my channel grow. I'm giving you the best 5 to 10 minutes in real estate and the mortgage markets on a daily basis. All right, let's jump into this. Summary of Fed Chairman Powell's comments. So Fed Chairman Powell met yesterday and it made a big impact on the market. If he came out dovish, that means the market would have lowered their jitters, right? They would have been, okay, well, I'm going to calm down. If it came out hawkish would mean I'm going to raise, or we're going to raise 25 basis points on November 1st when we meet again. That's hawkish. Dovish is, well, we're probably not going to raise then, but we're going to see what's happened in the future. We might raise in the future. I don't call that dovish, but the market took it that way. Let's go read what it said. Additional evidence of strong economy may merit more hikes. May merit more rate hikes. Someone flip that. Return to 2% inflation will require below trend growth. Guys, I mean, every economist is saying that's a pipe dream. If you want 2% Fed chairman, then you're going to be unemployed as well as every other American here. So, step up, okay? Committed to sufficient restrictive policy. They mean that they're tightening everything. Maybe meaningfully tightening in the pipeline. Summer inflation data was promising. September less encouraging. Well, it's less encouraging because oil prices have now skyrocketed. Since we didn't want to go and be self-sufficient, our current administration shut off one of the pipelines, and now we're buying it from everybody else who's trying to slow down production. Okay, OPEC is slowing down production, and we're buying from them. And now we saw crude hit 95, Brent crude hit 95. Guys, we're on this seesaw, teeter-totter, going up and down roller coaster. You know that it was at $6 here in Southern California, and more than $6, for a gallon of gas, unleaded, cheapest crap you can get. And now it dropped down to $5.50, $5.40. Guess what? We're going right back up. War only hurts the amount, the inflation. It just hurts it, including oil, and that's what we're running into. So, wow. Tell me if anyone else is looking at this, guys. 500,000 views. 500,000 views on this one tweet. Get it. It is the best news out there. I mean, come on, 500,000. Do you think actually anyone watches any CNN show? Come on. What a joke. All right, let's go back to CNBC. This gentleman is saying average mortgage rate hits 8%. Affordability headwinds persist. Tight housing supply means crash is unlikely, says Mortgage News Daily Matthew Graham. That's what we're seeing over and over. If no one wants to sell their houses, well, that's what's going on. In fact, I even saw a stat today. It said that on the market right now, 54% of the homes that are on the market are owner occupied. The others are flippers or bank repos, foreclosures, or a tenant occupied, or so we're having the majority of houses that are on the market aren't even owner occs. I mean, we're having, actually I say 55% are, 45% not. That number is absolutely wrong. I mean, wrong in the respect that it's never been like that before. I always would say, all right, I would be praying when I'm showing houses that there is nobody living in that house, right? Because it shows much better. People can see where they're going to put their furniture and their appliances. They can actually look at it. When you walk into a house, and depending on the condition and how actually it's been kept up, people look at it, it looks sloppy, ugly. All right, I'm offering less. I can't even, the unknown is ridiculous. The known is disgusting, right? So keep that in mind when you're selling a house. Pull all your crap out, put it in the garage, live like a caveman. That house will sell faster than any other house. You have all your personal belongings out, and it looks like absolute shit, baby. All right, let's jump into the rates here. Nothing to see. Basically, 2%, 2 basis points. It went up 7.80. We pretty flat on the FHA, but jumbo went right over 8%. We're at this point where this is where we're going, guys. We're going 8-9%. Like I said earlier this week, I showed you the predictions, the percentages of which we were going to raise rates. So it looks like the prediction is that the majority of people, the majority of analysts and economists say that we're going to look at January and probably February/March. We're going to see 2 raise hikes happen, and then somewhere in the summer we're going to see them take a stop it and then reverse. Now, I don't know if that's going to happen. I think a black swan event's going to happen way before then, and they're going to panic and have to drop it. Otherwise, you're going to see no one spending nothing. They're going to hunker down in your house. And hopefully, it's not a black swan event here in the United States. But with that all being said, it's very, very, I would absolutely slow down discretion spending. It's not in your best behavior and behoove you unless you had the extra money sitting on the sidelines. We're going into, I think, the worst fourth quarter in the last 10 years, probably 15 years since we had the housing recession, because I think that we're going to have a bad Christmas, and we're going to have a way bad Christmas. And if something happens in the Middle East, including detonating some type of small nuclear arm, or in the other part of the other WAR, then we're going to see everything just drop, including the stock market. Anyone that has 401ks are going to be just kind of just crushed, losing 30, 40, 50% off in a week, a day, a minute. It's going to happen. It's what I'm predicting is going to happen. But I don't want to be the doomsdayer here. I want to be very uppity up. I want to tell you that, if I'm out there, I'm thinking about buying a house. Do I want to buy now? I would probably, I'm probably looking right now and looking at the eye. If I saw something I really liked, I'd hope that there wasn't multiple offers. Yet, I got to say, the last 2 clients I had, I've been writing offers. Everything's multiple offers here in Southern California. Even all were going over asking. Believe it. I don't care if you believe me or not. That's where it's at. So with that being said, I will see you guys have a fantastic weekend. I will see you on Monday. This is a crazy time to live in a crazy market. You guys take care. Be safe.